Hello, everybody. And we're now at problem 1715. It's a good time. All right. So fair value hedge and interest rates, interest rate swap. On December 31st, Mercantile had a $10 million, 8% fixed rate note outstanding, payable in 2 years. It decides to enter in a 2-year swap with Chicago First Bank to convert the fixed rate debt to variable rate debt. The terms of the swap indicate that Mercantile will receive interest at a fixed rate of 8% and pay a variable rate of interest equal to the 6-month LIBOR rate based on the $10 million amount. The LIBOR rate on December 31st, 2020 is 7%. The LIBOR rate will be reset every 6 months to determine the variable rate for the following 6-month period. Mercantile designates a swap as a fair value hedge. So assume that the hedging relationship meets all the necessary for hedge accounting. The 6-month LIBOR rate and the swap and debt fair values are as follows. Okay, so let's take a closer look at this one here. Okay. All right. So okay. So on December 31st, 2020, okay. Okay, so it's going to be over here at, okay, so let's read this. So the terms of the swap indicate that Mercantile will receive interest at a fixed rate and will pay a variable rate equal to the 6-month LIBOR rate based on the amount. LIBOR rate is 7%. Okay, the 6-month LIBOR rate and swap values are as follows. Okay, so let's go ahead and take a look at this. Okay, so the first thing they're saying to us is because they're starting this on December 31st, 2020. So right over here, and I'm just going to do something really quick because I want to add this in. So we're going to add in another question here, but I'll get to that in a moment. So there's no, so the swap fair value here is at 0. So over here, okay. 2, the entry to record semi-annual debt interest payment on June 30th, 2021. Okay, so over here, what would they have to go through and pay? Okay, so over here, the amount of the debt is at 10 million. Okay, the annual interest is 8%. So the amount of the interest expense that they would owe normally, so the annual interest, so the interest expense is going to be 800,000. However, because they're paying interest semi-annually, I'm going to multiply this by 6/12, or this is going to be, basically this is going to be 800,000 times 0.5, or $400,000. So the way that they're going to go through and record this would be, I would be debiting interest expense on 6/30/21. Let's give ourselves a little bit more room. And I would be crediting cash. Okay. Okay, however, that's not all, right? So the 6-month LIBOR rate is 7.5%. So what exactly is going to be happening here? Well, what's going to be happening here is that I'm going to get some money back. So I'm basically getting, they're giving me, so the true amount of interest that I need to be paying is going to be at 7.5%. So, okay. So what this is going to be, okay. Let me just see something real quick. Okay, so let's be, so the six, okay, this is one clarification here. The 6-month LIBOR rate, this is, even though it says December 31st, this is going to be from January 1st through June 30th. So the 6-month LIBOR rate is at this point in time. So the amount of the interest expense over here that I would be paying would basically, or the amount I should be paying is going to be at 350. Because what I've said is that this amount here, they're basically going to give me, essentially, they're going to turn, so the terms indicate that I'll receive interest at a fixed rate of 8% and pay a variable rate based on this. So the amount of interest expense that I should be paying is going to be $350,000. So the amount of cash I'm basically going to be getting back because of this here is going to be the difference between these two amounts, or 50,000. So here I would be going through and basically saying here is that I'm debiting cash and I'm crediting interest expense. And this is going to be over here to record fair value hedge of the interest rate swap. Okay. So a way of kind of going through and looking at this. So the entry to record the semi-annual debt interest payment, that is going to be right over here. The entry to record the settlement of the semi-annual swap receivables at 8%, less the amount payable at LIBOR at 7%. So this here is A2. This here is going to be A3 on 6/30/21. So the way this works is that we would normally be paying interest expense at $400,000. However, they're giving us a fixed amount. They're basically saying, okay, we're going to give you the interest, or basically we're going to give you cash to cover that interest, but then you're going to have to pay it at LIBOR, which is going to be here at $350,000. So the net effect of this is that the amount of interest I need to be paying, or my interest expense, needs to be at $350,000. So over here, I'm going to have a debit here for 400. I'm crediting interest expense. So my ending over here, my ending interest expense is going to be at 350, which is the amount of interest that I should be going through here and paying, which is the amount at LIBOR. Now, if this said went to 9%, then I would be paying a lot more in interest expense because I'd be responsible for that amount because I'm agreeing to pay LIBOR. Okay. So the next one over here is to say number 4, the entry to record the change in the fair value of the debt on June 30th, 2021. Okay, so the debt fair value is now at 9.8 million. Okay. So over here, okay, so my notes payable. Okay. So this is at 10 million as of December 30th, 2020. Okay. Okay, so now as of June 30th, the amount here is at 9.8 million. So I have to go through, so to change in the fair value of the debt. So this here is going to be 200,000. So A4. So I'm going to be debiting notes payable. I'm going to be crediting unrealized holding gain or loss on income. And this is going to be for the 200,000. And this here will be to record the debt fair value. Okay. At the same time, so this is the debt fair value right over here. So we're going to go over here from 10 million to 9.8 million. Okay. All right. So that's a note payable. Okay. The next one here is to look at the swap fair value. Okay. So my swap fair value is a negative 200,000. So this had a balance of 0 at 12/31/20. And this is going to have a negative 200,000 value at 6/30/21. So in order to record this, I'm going to need over here is I need a credit of 200,000. So A5. So my swap fair value is going to be over here at 200,000. And I'll have an unrealized holding loss of 200,000. Okay. All right. So that's where we are so far. Let's now go through and take a look at B. Okay. Indicate the amounts reported on the balance sheet and the income statement related to the debt and the swap at December 31st, 2020. Okay, so at December 31st, we haven't really seen the effects of it yet. So over here for letter B, my balance sheet. And as of right now, because the interest rate has not passed yet, so income statement, no effect. Okay. Let's look at letter C. It's going to be a little bit different. Okay. So for letter C, my balance sheet, and this is as of June 30th, 2021. So for my liabilities, I have two portions of this. I have notes payable, and this is as of this is 9.8 million. And then I have a swap fair value over here at 200,000. Okay, so my total liabilities over here is going to be at 10 million. Okay. For my income statement, I'm going to have interest expense. My interest expense is going to be 350,000. And at the same time, I'm going to have a unrealized holding gain. Call this 200,000. Unrealized holding loss on income, 200,000 right over here. So we'll show this as a negative. So my net impact of these three items right over here is going to be the 350,000. Okay. So the next one we need to go through and do is what I want to actually go through and do is do the same thing over here for December 31st, 2021. So let's go through and kind of discover what this is. Okay. So over here in terms of the swap fair value, right? And also in terms of the debt fair value, let's take a look at these two items here. Okay, so as far as the, let's go through and see how we're going to do this. Okay. Let me move this over here. Okay. So this over here was at 6/30/21, 6/30/21. Over here I have 12/31/21, 12/31/21. Okay. So I'm still going to be going through and paying the same amount of interest expense up here because I'm always going to be going through and paying this. But when I get over here to 12/31/21, okay, my interest rate is now 7.5%. So when I multiply this over here, my hedge is going to be at 25,000. So I should be paying a total amount of interest expense of 375. So over here, this is going to be 25,000. So that's how we get that there. Now, in terms of going through, so for my interest expense, so this would actually be, yeah, so this will actually, I'm going to do this as a separate T account. We'll use a different color here too. Okay. Okay, so that's the first part. Okay, so then over here, so we'll say that the next one over here is going to be my notes payable. Let's take a look at notes payable. So my notes payable now has a value, or the debt fair value at December 31st, 2021 is now going to be at $10,060,000. I swear to God, I hope I'm doing this right because I don't want to have to redo this video. But if I do, it's okay. I'm not sure if anybody's watching this. But if you are, I'm sure you're as excited as I am on this Wednesday night of December 2nd. Okay. So over here, to get from, so this is going to be on 12/31/21. So the change in the fair value, right? What do I need to do get from here to here? This is going to be 260,000. So I'm going to be crediting notes payable. And I'm going to be debiting my unrealized holding gain or loss on my income. And this amount is going to be 260,000. Okay. Okay. Now, in terms of the swap fair value, this is telling me it's now at 60,000. So we went from a negative 200,000 to now we're at 60,000. So this tells me here that the swap fair value, so this balance here was a negative, so I used a credit balance. This over here as a positive 60, so I'm going to use this here as a debit balance. So my adjustment to get to there is going to be 260,000. Okay, so over here, I'm going to have a swap fair value of 260. And I'll have an unrealized holding gain or loss in the income. It's curious that these numbers are the same in both of these examples, but that's for Benjamin Button. Okay. All right. So there we go. Okay. Let's see what this question is now going to be asking us. Indicate the amounts reported on the balance sheet and the income statement related to the debt and the swap on December 31st, 2021. Okay. So, so this is what's interesting. Okay, so over here, okay, so my balance sheet, okay, my swap on my assets, I have a swap fair value of 60,000. On my liabilities, my notes payable is at 10,060,000. Okay. So for my income statement, so the interest, so this is basically as of December 31st. Right over here. So this is as of December 31st. For my income statement, okay, I'm going to have interest expense from 1/1 to 6/30, 7/1 to 12/31. So here, this was at 350, and then I'm going to have another 375,000. So my total interest expense for the year is going to be 725,000. Okay, so then in terms of the swap holding gain for this past, for right over here, this is going to be, okay, so what they're doing is they're aggregating these amounts. So when I look at this over here, if I take on the swap over here, I'm going to have, okay, so my total, so the unrealized holding gain or loss. So I've got debt, fair value. Okay, so on 6/30/21, on the debt fair value, which is right here, I had a credit of 200,000 on 6/30/21. This is a change in the debt fair value. Then over here, I had an adjustment of 260,000 on 12/31/21. So on the debt fair value, I have a net loss of 60,000, okay, which is the difference between these two here. On the swap fair value, I had 200,000 here, and I have 200,000 over here. Excuse me, I have 260,000 over here as a gain. So I'm going to have a net gain on the swap fair value of 60,000. Okay, so on my income statement, so swap fair value gain 60,000, debt fair value loss negative 60,000. So my total income statement amount is going to be the sum of these three items right here, or $725,000. Okay, that was fun. All right, so I related to the debt and the swap on December 31st. And that's pretty much what I would go through and do for that one. So thank you for joining me. I look forward to seeing you on the next video. Have a great one.